Hello, everybody, and welcome to Options Paycheck Live. Today, I will be planning our option trades for Monday's market open with a focus on generating steady income through selling puts and calls. If you are new to the channel, I focus on practical options strategies to build a reliable second income. Please like this video if you find it helpful and subscribe to the channel to see my trades. Let's get started. I will cover today my last week's results. I will do it in Google Sheet. I will pick stocks for trades this week. I will look at the chart. Of course, when we plan the trades, we will look at the open interest of options. I will focus on weekly options. We will also check if there is no upcoming quarterly results or any upcoming major event. And we will also check if next week or when we plan the options, we don't plan for monthly options because the volatility there can be quite high and we would need to adjust the strategy. When we will be planning options and trades, we will look at the options premium, then we plan the trades, and I will document everything in the option trade logbook in the Google Sheet. All right, so let's go to the Google Sheet and start reviewing the options. Meanwhile, please put your comments and questions in the chat, and when I see any message, I will be answering your questions live. So last week I had two Nvidia options for both were covered calls. Strike price $102 and $115. The one with the $115 expired worthless, so I will just adjust here expired worthless. The one with the strike price of $102, of course. It was still in the money, and I rolled the options as I was saying in the last stream. So I rolled the option, and once rolling the option, I earned $25 in premium, or almost 26, $25 $0.84, and I opened the option trade already for this week. So it's highlighted here. The rest, all options actually expired out of money. So let me just document what has happened. All of them expired. I realized last call I've been talking about for Rivian options with the strike price of $12.50. I've been talking about having covered calls. Of course, I had cash covered puts. Nevertheless, all the other content was correct. I was just, for some reason, I was just referring to covered, cash covered, actually, sorry, I was referring to covered calls instead of cash covered puts. All right, so let's have a look on what trades I want to do this week. Of course, I will focus on Nvidia, where and let's have a look here. All right, so I need to log in again. Unfortunately, I've been logged out. So bear with me, please. Right, I'm back. And as I was saying, I have the Nvidia. I have 200 shares of Nvidia, 216 shares of Nvidia, and I have open one covered call option contract, and I want to open another one. So let's check what price would be the best. So again, the price currently is $115. It seems it's a little bit of resistance here on 150, around 115. My price when I was buying the shares was 115, and so I could open 115 contract or contract with the strike price of 115, or I could potentially go a little bit higher to the next resistance level. And of course, if I want to be on the safe side, I would take 20%, 20% buffer, and it would be around $136. So let's check premiums for strike price of 136, then strike price of 123, and I will just write it here, 123, and then 115, and let's check what would be the premium. Just write it so on the paper so that it's easy to check. And so we are talking about options for next week. So it's weeklies. May 9th is the end date. So for a strike price of 115, I will be getting $2.39 for contract. So if I put it here, $2.39, not to the fees, that's to rather to the price of the contract. So I would be getting $239, which is annual return on the capital of $108. Well, that's really nice. So now let's check 123, and I will just put it here on the side as well. 123. It's way less, of course, 31 cents per contract. 31. It would be only 14%. And 136. 36. So I would go for 135. It would be only 2 cents per contract. So it would be around, it would be $2 basically. And I'm not really interested for such a low premium. Also, if I look at the chart, where is 136? Let's visualize it. Let's visualize it on the chart. So it's somewhere here. I mean, from technical analysis, Maybe you can look at the weeklies or at the weekly moves. Was there any recently any move like this? Not very likely. I think even so. Let's check this one. Even this one, 17%. Nvidia is not really moving 20% per week. So it seems like the biggest moves are still below 20%. And the question is, do we want to get a higher premium and basically play volatility and expect that the price will still move within the range of 115 potentially to, I don't know, 20, 95, hopefully, right? Or somewhere here, right? It's $90. If I go to dailies, uh, daily candles, right? So there is this there is this chance that it will be still moving somewhere in this range. I will go for $115 strike price. As I was saying before, I I'm already rolling $102, and I expect that the price might be actually dropping. Still, there is still some uncertainty in the markets. There is still a chance that there will be some correction. So yeah, let's go for higher premium this week, and I will plan $115. Now it works. So $115, 239 premium, and I'll be selling. So order, sell, limit price. I will put $2.39. Will cancel. Sell order. Accept. All right. So the first trade is planned. And of course, as always, I might adjust the trades based on the pre-market. But right now, I don't have the pre-market data. So based on the pre-market, I might adjust the trades. Next one is Tesla. So for Tesla, I have, and let's again look at the portfolio. I have 200 shares. So again, I can plan for 2 option contracts, and I will be selling covered calls again. I will check chart. Hold on. Sorry, just one thing for Nvidia, which I didn't check, and I wanted to check. I want to check the option interest. Option interest, option chain, option charts, open interest, and let's have a look on this week and also then few monthlies just to see the ratio of open option contracts. Yeah, see, so next week is actually quite low. Um, so if you compare, just show it again, a little bit more in detail. If you compare open interest, so number of open contracts for this week and for the week after, and then few additional monthly options, which are usually with higher open interest, a higher number of contracts open, you see actually that this week is pretty low, and therefore there will be lower pressure on the price from the option contracts. So again, let's just check next week and let's see, right? And let's see what price is mostly there. All right, so people are opening options for strike price 115 and then strike price 120, a little, not really significant. Max Payne. So this is Max Payne is price where the most of the options expire worthless, and it can be also indication where the price or towards which price or price level the price might go towards, right? So current price is $114, Max Payne is $109. So there might be actually there might be price movement to move towards 109. So decline of the price. All right. Um, and I think Nvidia is also, yeah, there is the quarterly call is actually only in at the end of May. So nothing major. And is there any specific major news? Chip tariff worries, nearly 40%. Yeah, maybe we can check as well technicals. 1 week, 1 day. The technicals are more buy, 1 week more neutral, 1 month more towards buying. Right, right. So yeah, let's see. The trade is planned. It's really play towards the price moving more to the side or be volatile and going down again. Um, we will see how this will play. So next, which one I want to check is Tesla. And for Tesla, I will open the chart. So for Tesla, there seems to be this range, right, between 295 and 220 approximately. And now after the results, the price went up, but still was hitting this resistance at 295. Last week I had contract open the strike price of $302. This week I will have a look. Basically what I have in my mind is if it goes up. I would not expect it goes above 350 level. That would be really the safe bet. Then the other is really keep it quite low, somewhere around 300. Basically, maybe the same strike price as the week before, and potentially I could be betting also that the price will go down again. But for this, I might actually also do split, and I might do two call options for two contracts, one for a lower strike price and one for higher. But let's check what is the premium. And, and sorry, before I check the premium, I want to check also here the technicals. So it's neutral buy the in the longer it's also more towards buy and then even more. But it's not really significant. Not really just one direction. You can see it's more nuanced, right? If you look at the detail, it's more nuanced than just buy. If I look also at the option chain, okay, I want to check in context of monthlies. Yeah, this week also not so many option contracts open, right? So let's check in the detail. Clear. I'll check in detail this weekly options, and the price is, yeah, I mean, there is few. The highest volume is actually at the strike price of 300, and then it's pretty insignificant. All right. Again, so right now the price 287, 20% would be 344. So what would be premium or 444? So it would be somewhere here, right? 31. If I did two contracts for 31, be $62, and it would be 5% return on the capital. Well, so for Tesla, what am I usually doing? Around your 30%. Maybe let's filter for Tesla just to check the trades in the past. When I was playing safe bets, it was really insignificant. But then, yeah, roughly, I don't know, between 10 and 30, right? This is an outlier. Um, 5% is really low. So if I go for 330, I have 75. With 13%, overall, I would be getting $400 because I'm already with Nvidia. I'm already planning for high premium. So 330. How does it look on the chart? Yeah, check the weekly moves. And for Tesla, Tesla can be really volatile. So here it's 18%, but here it's 30, of course, 27. So it can be really wild. And then even like with 30%, even 20% buffer would not help me, right? Would not protect me. Mhm. So what do I do? Some explain. It's also below the current price. I guess basically it's really decision between the price and the markets will be still volatile, will be still nervous and will be oscillating between the current price levels, or the market will get optimistic and will just start growing as the technical analysis potentially suggests. I think I will for Tesla I will be somewhere in the I will do the following. I will be moderately conservative. I will go for the strike price of 330 and I will go for 330 and potentially adjust the trade based on the pre-market and then during the week as the price will be moving. When I was looking at the chart, I was looking actually at one more thing, and it's basically uh, what it does. Because if there is if there is strong move upwards, right? So here it was like 21%, then a little bit down, and then almost 30%. Just the dynamic, um, how it moves after the strong moves. It's cooling down a little in the upcoming week. Well, I think 330 might be good compromise between the price could grow, but also the price might be declining because of what is happening on the market. and then I would be getting reasonable premium. All right, so let's do it this way. Um, Two contracts and 330, and here I have 115 for Nvidia. So just documented the trade right now. All right, so now I will move on to GameStop. Here my my purchase price was around $31. I will have a look on GameStop. I have 200 shares, so I can do two contracts. Um, so what would be the price if I open, I don't know, $32? I would potentially get $10. $10 on premium. Actually, for two contracts, $20. It was $32, right? Yeah. $32, two contracts, and it was 10 cents. Mistaken, yes, 10 cents. Right, it would be around 18%. Um, let's check again for GameStop also option open interest, and we will check also technicals. So open interest first. Again, I check this, the monthlies. I, well, this week seems to be pretty quiet. So then let's go to the detail again. And yeah, $30 strike price is the highest open interest, but it's quite far actually from the current price. So there shouldn't be really uh, any wild and volatile move. If we check max pain, yeah, it's 27. It's around the current price. And also then if we check the technicals, it's also more on buy side for 1 day, for 1 week as well. Longer term, even more towards buy, right? So for 27.48 would be 20% buffer. Okay, 30 to 33 would be 20% buffer. And yeah, so I'll do $32, two contracts, sell 10 cents will be limit price, and accept. All right, so this was for GameStop. Then let's go for CLF. Cleveland Cliffs. It's nice stock. If I look when I look at the stock itself, so you can see I have uh, I have bought 100 shares, average price 740. So currently I'm 20% in I have 20% of unrealized profit. I want to keep the stock basically, as I was saying, it's a play that the steel mill will benefit from the current tariff situation, and potentially there might be soonish double on this price. I mean, it's not guaranteed, of course, but it's play I want to do. So let's have a look on the options. Okay, current price for Cleveland Cliffs is $8. Would be the 20% buffer. So then price would be 10.56. Let's see 10.50 how the options look like. 10.56 cents. Why is it not working? Now, and I do have 100 shares, so yeah, $6 I would be getting from one option contract. Let's just put it in the Excel and see what would be the return. 35%. So this is nice. This is nice. It's small position, but actually it's nice. It's nice return. Do 6 cents limit. Put to cancel and sell order. Let's see what will happen when the market opens. The pre-market might change actually quite a lot to what is being planned. All right, and the last what I want to plan is Rivian. So for Rivian, I will be selling cash covered puts. Again, let's check the chart, and I want to be selling cash covered puts for 12.50. The reason why I'm doing so is basically because I sold my covered calls for 12.50, and I want to get to the position to the same position. And so let's search for Rivian. Okay, and here I will be selling puts, right? So 12.50 puts, sell 27 cents premium, and I will be selling two, or maybe potentially even three. I don't think I have enough cash for three. Oh, let's check how much cash. Well, yeah, it will tell me if I have enough cash, but I don't have 3,600. It's for sure actually. So I will put two. $54, so 27 cents. Let's document this. It's really nice. There must be. It's nice actually. It's really nice. How comes? Yeah. IV is 100 So that actually drives the price. Yeah. Right. So this is good learning, right? So what we can see from Rivian is that there is earning call next week, and therefore, whenever there is earning call, the internal volatility is actually going very high because there is very high uncertainty what will happen with the price right after the earning call. And so my play right now is actually that there is a little bit of um, pump of the price before the earning calls, and that there will be sell off after the earning call. Let's see if this hold the ground or not, but I I believe there might be chance actually that this will happen. Also, if you compare the chart of Rivian, and if you compare it with Tesla, let's let's try um, let's try to do this. Not so visible in the weekly granularity, but in the daily granularity, it really it was really moving in a very similar manner, right? Um, I don't know if I do this, if you see, no, you will not see it. If I split the windows, you will not see it. I cannot show it next to each other. But all right. So Tesla was going down in February, right? Then up in March, then down again towards the beginning of April, a little bit up and down towards end of April. And I think if we look at this one, why the granular or why the chart is looking so much different? Because it's yeah. So I think it's similar. If you look at it, this will be probably better visible. Um, Maybe let me know in the comments if you know if you how you can actually overlap the charts. So I would like actually to see this one over the other, but yeah, it's moving sort of similar, right? February going down, March, then beginning of April up, then again down, and towards end of April again, right? Was it? Yeah, yeah. It's sort of similar. It's not exactly the same, but it's similar. But my point is that now actually Rivian is really uh, going more up. It's peaking now, and so it might be really because of the earnings. I don't necessarily see any specific news on Rivian why the price would be peaking. I think it's really now about. Of course, it might benefit a little from the Tesla backlash, right? But the main news will be about R2 production, which will come only next year. But around 11 or here 1050, it was good entry price, which I did originally. And so yeah, so I believe it might go again towards 1250. So I'll be playing. I will be playing actually this game, and with this week when we have the earnings, the premium is quite nice. So I will actually go for price of 12.50 and will earn a nice premium. All right. So this is for Rivian. Is no, it's not planned yet. So I will plan it. Please let me know in the comments what you think about the trades. I would be really interested in your perspective. I'm doing this to document my trades and to learn from my past mistakes. So when I have all the trades and my mistakes documented, then I can learn from it. And of course, I will be happy to hear your comments and see how you would execute the trades and yeah, what you like about the strategies, what you don't like about the strategies. So let's have some conversation. All right. So the trades have been planned. They have been documented as well. So now this week we are aiming for the premium of $494. So I will put it here for $94. This capital. So it's around 32 percent return on the capital invested for all weeks. I'm doing it already for 6 weeks. For 6 weeks, the return is 25%, which is not bad. So in 6 weeks, I if all trades are going to be executed, I will be getting $2,263 in premiums, which is quite nice. Just look like this. This is the right price. So this was here. This is here. And all right. So now all trades are documented, and I think we can wrap up the call. So guys, thank you very much for joining today's Options Paycheck Live. We have planned our Monday trades. I will review during the day tomorrow and see if the pre-market actually changes something significantly for the plan. We have planned trades for Nvidia, for Tesla, GameStop, Cleveland Cliffs, and Rivian with the planned premium of $494. And I'll be back on Monday to review the execution of my orders. And of course, I might be back during the week as well if there is something significant happening on the market. But latest, I will be back on Sunday for another live trade planning session. If you find this session helpful, please like the video and subscribe to the channel to stay updated on my live streams. And let's continue building a reliable second income through options trading together. And until next time, bye bye.